Good evening. This is the Elliott Wave Daily Update for the NASDAQ 100 and the S&P 500 for Thursday, October 17th, 2024. The market actually does continue to work through what I am continuing to look at as a minute fourth wave within this larger minor fifth wave, which is moving up. And then as that minor fifth wave completes, it should finish at the same time an intermediate third wave. So within this whole process, we are probably within the last third, maybe a little bit more, of the move up to finish that minor fifth wave, and that we're in a fourth wave. Now, within there, so here's the 4-hour chart. We can see there's minor 3, minor 4, and we've run the fibs for that minor fifth wave. 1.618, that is where minor wave 5 would be. 1.618 times the length of minor wave 1 comes in at 21,138. And I've discussed that in the actuality, if it is a minor 5 and we're getting up to complete an intermediate third, I would expect, my expectation would be that it would get above 21,213, which is the previous high from July. That to complete this intermediate 3. So we still have more upside to go. But as we all are witnessing together, here on the NASDAQ, it is having its problems of really, it'll put in a solid rally and then get smack dabbed and kicked back down to the curb, so to speak. And so, because there's a lot going on within the titans inside the NASDAQ, with these intense growth and then getting too far and then getting a recommendation and getting an upgrade and all these other things and year end. So putting that all together, it makes sense in particular, which is why you see intraday, it is like a chop fest. It is up, down, sideways. Oh, quick up move, quick down move, and without follow through. So because there's a lot going in within the components of these indexes, and particularly here in the NASDAQ. So like today, Netflix basically got beat up because it was reporting earnings. The earnings came out. Obviously, they're okay. The company is, so in essence, where we've gone is we started at the opening here in the regular session for New York. The opening of the stock was 701. That was the high. And from 701, then it closed at 687 and some change, so it was down 14. Right now it's trading up at 713. So from the close, you've got about a 33-point move, or actually a 23-point move, or even less. So anyway, so including the move, it's not going to new all-time highs. Let me say that. And then I'll learn to do my math a little bit later, cleaner. Back in the NASDAQ. So this was all good, and then we've just been killing ourselves to gain ground and to get out of this triangle and now thrust up and out. And that's all really that's left, because what you do is you connect 1 and 3 to give you the upper boundary, 2 and 4 to give you the lower boundary. I don't have the bottom of that 4 in yet. I'm thinking we're going to go through it. So it's just going to expand this triangle out a little bit. In fact, I should move that because I had it up as if that was the 4. And now I'm going to say, what if that's the 4? So you can see still a diagonal, but it might give us a little bit more pop to get through. Because to see it go through within the fifth wave to get to its pinnacle is not so unusual. So, because here we did go up a little bit higher in the A, so now we do need to break that on here and then break that to get this fifth. Anything below that still could be, if I say it got to 21,138 instead of 213, it's just that fifth wave ended in a failure. And it presents a little bit more serious look at, okay, what comes next? How far is it going to go? This failed, not by a lot, but it failed. When the third wave excuse me, yeah, the intermediate third likely had, it's over here somewhere, and actually it somehow disappeared. But there is a third wave that takes us up around 23,000, if it's intermediate third. But with this being the fourth, the fifth, it starts to get very questionable. But I have to toss in and keep alive. While I may be looking for this to finish and make that new high, as we get closer, get finished with October expiration, we start moving cleaner through. We get some buildable, so build onable, let's say, earnings reports, which is going to shift the narrative and maybe change it a little bit in terms of what's going to stay in the portfolio, what's getting added, what maybe they have a position they're going to add to it. So again, the seasonal charts are all continuing to suggest we should have a fairly decent to the upside November into December. And that's all to do with year-end posturing. And some of that is going to come, of course, from earnings. Now, what the other side can be telling us as well, if earnings continue to be iffy, to not be blowing doors off, etc., then it's not unreasonable to have to include an alternate, which would suggest that that wave 4 is not done yet, and that we're going to be coming down. So in other words, this is the A wave, minute wave A. This turns into a minute wave B, and wherever it should end up. If we got one more to go, which I don't know, but maybe we do, because this could be the C. Because even if that's A, B, and then we still have the possibility we could have put a C wave there. Just a possibility. Which should be there anyway, tucked in there somewhere. Because there is a C wave now, but we're calling it within 3. So again, the 4, I'm going to take this down to the hourly chart now. And we came in, and I had thought, okay, we have 2 ways to look at this. 1, 2, that's the 3, the 4, and the 5 for wave A. And so that's pretty much because I remember talking about it saying, hey, here we are again at a high, we're getting a 5-wave structure down. And then it extended one a little bit further, so it just kind of pushed it to 1, and then A, B, C, 2, or A, 1, 2, and then 1, 2 again, 3, 4, 5, or 3, 4, 5. So we had nicely extended, and then an additional 5, so we put an A there. Because again, after the rally, you don't put a 3 and expect the 4 to be complete when it's a total ABC. Can't mark this a 4 if it counts best as 5. So it becomes A. This ends up being a 3. We come all the way down. We have certainly crossed over what that would be wave 1 if this was 1, 2, 3, and a 4, and still going to go in a 5, but it didn't. So it turns into an ABC, AB, 1, 2. We should do another quick nosedive, get down to at least 100%, where wave C would be equal to wave A. That would keep us within the realm of the triangle. But 618 is also in the cards, and that, so we either have 20,121 or 19,828, and those would be the levels. But I would think specifically we need to get below 20,204. Complete the C wave should break the A wave, and it should also be a 5-wave structure, obviously, because it's a C. But the other part is that this does not have to be a flat. Can't be, because you have a 5 down A, so it's a zigzag. Doesn't have to be a super big zigzag, but still, the 100% takes us to there. That would fulfill the picture. But if we come down hard enough, 3, 4, 5, sure. We can get a couple of those. And we had them. So this was the thing. The market does this huge rally, and the minute we open, we go down. Just go all the way all through it, and then rally a bit, and then just bring it all the way back down again. So A, B, A, B, C, B, 1, 1, 2, 3, 4, 5, A, B, C, B, 1, 2. Starting over, 1, 2. We're in a third. And it could be 1, 2, 3, 4, 5, a little bit more, get a third in there, and then do a little rally, and then do a 5. So yeah, that could be a good resting point. A stronger 3 maybe brings us down to here, and then a 4 and a 5. I think we'll stay inside. And then, of course, this bottom would move to wherever this comes in. And if it's just below there, well, that's the way it is. But we see that there's a pretty strong triangle. Okay, so down to the 15, still looking the same. So we still got all that. 1, 2, 3, 4, 5. So that's 1 of 3. And we're doing a little 2. See that? 1, 2, 3, 4, 5. So there's 1 of that larger, a little bit larger third that I believe we should end up down there. So why do we keep seeing the signs? Well, we saw back here, this was 5, and that it was the 3 made it the 5. So we had an extended 1, 2, 3, 4, 5. Now we come back up into here, we do an A, B, right? A 1, 2, and then we can count 5. So yeah, it could be an ABC, but no, I don't think so, because of the way that it's the setup. The setup is that we should dropping in a C wave. C waves are always 5. Well, to start it, we had an A, a B, and a C, which is 5. But then you're starting to wonder what. If the count is showing that we should be doing a larger 5 down, right? And that's 1, 2 of C. 1, 2, 3, 4, 5. 1 of 3 of C. Get a 2, come back down, a 3 and a 4 and a 5. Complete that, and then a 4 and a 5 to complete the C. All right. Let's go quickly back out to the daily and take a look at the moving averages, because they're the more important. You can see, kind of going flat. We got down there. Okay, maybe take a pause, and very flat, and even more flat. So they turn into support. And so the 50 is above. So the 50 would actually be a good support if we go through the 100% fib. Then the 50 moving average at 19,917 will be very good stopping point, because it's pointing that it should be what it wants to do. And then shove the market back. And so an AB, and then we get the 3, maybe down here, and a 4, and then the 5. And we'll remeasure. So as far as these fibs, they would be done. These are for the third. Actually, no, they're for the whole C wave. So that could go. I don't think we'll get down to there. I think we can get between here and here. All right. Over to the S&P. And come down off the daily. Let me go back to the 4-hour chart here. Give it a second. It will populate. I've had this happen. You're like, okay, what happened to all my work, right? I'm going to give it a shot, see if this doesn't kind of do itself. Go to an hour, back to the 4-hour. It gets really, I know why. Sorry, folks. It's there. I forgot the slash. Yeah, I'm having one of those days and weeks. I missed the detail. Okay, here we are, 4-hour chart, S&P. Same deal. Minor 4. We're coming up in a minor 5th wave. Right now, the 1.236 is not necessarily attaching to the minor wave 5. The 1.236, and along with its counterpart, the 1.382 Fibonacci level, goes to the minor 4 if it is still in progress. We've discussed it. The market continues to show stronger upside tendencies versus we're just going to sell off like you guys over there in the NASDAQ. So it's getting hit, but it's generally rallying better and reaching new highs than the NASDAQ. So if I leave it there, that puts us in a 1, 2, 3, also into a fourth wave, as the minor fifth wave forms a diagonal. So I could connect the same, put 1 to C, or to 3, and then wait for the 4, because this does count best as an ABC. And so it's not the easiest, but I'm going to say it's a diagonal on both. So it's come down to the hourly chart. And now we're concerned with what we're dealing with in here. And yeah, we moved to another new all-time high in the futures market today. And it really happened overnight in Globex. And we reached 59.27.25, I'm pretty sure. Yep, on the nose. And so it really started to look like, okay, but wait, this is 5, even without going there. And this was all a part of the next little bit of a leg up and a part of the ABC up. And, and here we were. This is where I looked and started the day, and I'm like, okay, if I put my 4 there, here's my markers, et cetera, et cetera. And then, of course, it just does this. So it keeps the market in a corrective fashion, a little bit of a slight irregular, because it did, again, break that high, 59.18, 59.27, not by a mile, but by enough. So I would consider a small irregular, but here we have the A, the B, and now we're looking for the C wave down. And the same deal, 1, 2, very little pop as we start Globex. Oh no, as we get ready to finish, I'm a little bit ahead of myself. The after hour. So we got 1, 2, and I believe here we start to come off. Now here the 100% is 58.58, almost 58.59, and it's like, no, I need it to come below 58.50. So there you've already built in the 1.618, and that would be, even though this is only a slight irregular, on a Fibonacci basis, that's what you'd look for. You'd look for 1.618, and that takes us to 58.16. So once again, even though we're still within this 4, staying above 5800 I think keeps the market very, very healthy in terms of reaching some upside targets or working its way to 6,000 or 6,000 plus by year end. So, and again, seasonal charts show the S&P along with the rest of the equity indexes to having a very nice November and into the beginning of December, and just kind of peaking and coming down, but resting at higher levels through December. Okay, now here we are now. So I am going to leave it as such. And if I had to change and think about what else it could be, it would be that other. If the decline really just kicked in and had reason. So in other words, if the market found reason to just let it go, that this was not going to last, and it just starts bringing it down, then we'd be looking at again 51.70, just to below that. From where we are, big drop. We'll see a lot of value get chopped right off. And of course, because it's so high, when you start taking off these big numbers, it's real. But understand, that's how much money is being pushed in and floated around. So, yeah. And if it gets taken out, trust me, it's not taken out of circulation. It's being taken out of the market, maybe put somewhere else for right now. But it is not just leaving. There'll be a lot of losers, but there's going to be, for every loser, there's a winner, et cetera, et cetera. All right. So to come all the way back down there, I don't think is an unhealthy move. I think it could present itself as extremely unhealthy and dangerous. And dangerous in the way it's like if you're a swing trader, you're a day trader, and you're like, oh, we got to stop, we got to rally, and it doesn't. So as that type as a futures trader or even a swing trader in some of the stocks, you're like, oh, they should be some support there and we get a bounce, and it doesn't. And it ends up costing you double or triple of what you thought. Because now you're still, long because you stepped in and it doesn't. And it just keeps dropping. So money will leave. There will be losers, but there'll be winners every step of the way. Okay. If that should happen to the downside, and I'm talking about it breaks through 1618, breaks through 2.618, and then we're starting to hit these levels, because these levels actually cover the 4. And we could actually, if it is a diagonal, we could come all the way down to there and still, even down to here, and still be a 4. But because it's being held, and this was strong, I think that break could lead to this break, could lead to that break. And what's happening as we come down, if I may discuss, is that you're seeing the gamma levels are changing, the options are changing, and flowing. So the options flows where the capital is moving from and to, and what starts to happen to the index when it breaks below, say, 5,800, when it breaks below 5,850 for that matter as a start. What would our next gauge be? It'd be 5,800. So you kind of go in that range. And we have 5,816 where a 4 could finish. But if we're looking at it's got a lot more room, then maybe I'm still up, going lower one more degree and have an A, B, C, A, and then a B, and then a C. So there's different avenues that corrections can take. We have to let each segment come in and either take it as a standalone, that's the way it is, or there could be more, and the market just continues to move around in a tighter, smaller, maybe extending to the downside way. Right now, I am going to look for this ABC, for the C wave that I believe we're in right now, to continue. And these are my support levels, 58, 58, 58, 59. And then when we have the 1 hour, 200 period moving average at 58.50. We have the previous low at 58.50. That's a good level to get down below, hold, maybe a little bit extra, be done. We'll check the count to see 1, 2, 3, because that definitely could bring us down here in a third. We get a little 4, and then a 5, and now we're sitting here. So still keeping it above the 5,800 level, which I think that's where you start to find a larger buildup of, of gamma. So it should be support. And then also possibly maybe volatility triggers, as options trade and the volatility picks up a little bit and all these things get released, a lot of stuff gets readjusted. And then we get to take a look at it. They're running through the models and you get to look to say, okay, these are breakpoints now, or these are support, this is resistance. And so that's going to be important. And that's all just dealing with the flows and the immediate side we have. Hourly look, a 4-hour look. All right, so let me go back out to the daily real quick and take a look at these moving averages. And let's see, still actually looking very healthy for rally versus the NASDAQ, which has already seen the 20 and the 50 and the 200 go flat. So these are still very healthy. In fact, on the daily, the daily 8 has not been broken. Still just kind of walking it up there, getting there, comes down, takes a look, then picks up the rally again. So that remains intact. The uptrend off of this one remains intact, at least from this low. So we go from the September 6th low. The rally's been moving on. All right, now let me take a quick look to see what we have in terms of economic data coming in tomorrow. What we have on Friday is, number one, it's an expiration. We're going to have some decent vol coming in there. We have housing starts and building permits, and one Fed Gov talking at 12:10 p.m. The other two are 8:30 a.m. All right. That is going to be it for today. The next daily update will be on Monday, October the 21st. And I may attempt to do it tomorrow. I have a pretty busy weekend in front of me, but we'll have the weekly update out either by tomorrow or by the latest on Saturday.